Good morning from Chicago's Chicago Board of Trade building here, traders. Thanks for joining me. It is episode number 2132. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, very simply, the market posture is mixed risk off, really, or mild risk off. We have pulled back a little bit from yesterday's settlement. The S&P is down about 14 points or 31 basis points. The Nasdaq's down 39 basis points this morning. Also, please note that it is the official rollover today for the U.S. index futures, which basically means that officially the front month on the exchange is March 2022, which is designated as H2. However, because the volume in March is so poor for today and most likely tomorrow, the volume in the March contract by the end of the day is expected to match or exceed the December contract. Normally, I roll with the exchange. I just kind of suck it up and do that. But recently, I've been hanging on to December or to the expiring month, and so I'm doing that now. So be aware that everything I'm doing is going to show December 2021, despite the fact that the rollover started today. Expiration, quad witching Friday, is next Friday, the 17th. So the prices you see up on the screen are designated as DEES 2021. So if they look different than what you have, that is the reason. Again, the market has a mild risk-off sentiment. Really not much pushing this around. We're seeing some mixed inflation numbers out of China. Some real estate developer problems in China. The Beijing is putting pressure on the PBOC to do something. It reduced the RRR numbers, I think, from 9% to 7% to help bolster that. Even though the position was that the Chinese government will not intervene in the real estate market, but it looks like they are. So there's some trouble there to avoid bankruptcy or major defaults. The other piece is this morning the U.S. reported some really outstanding initial jobless claims at 184,000. That is the lowest since the pandemic started. 184,000 claims, much lower than the prior 227,000, and much lower than the expected 225,000. So there's a lot of pressure on the jobs market, which is actually can be seen as a negative for equities, as this shows very, very much an inflation problem. If we're at full employment and the JOLTS number that came out yesterday was also quite strong, it means that wages have to go up as dollars chase labor. As far as earnings, we've got Hormel Foods in Siena. After the close, we have Costco, which is ginormous, and Broadcom, Chewy, and Lululemon. And for the releases today, we're looking at wholesale inventories at 10, expected at 2.2%, and a 30-year bond auction, and that's it for today. Next Wednesday is the FOMC, which is really baked in. Next Thursday is the ECB, which is not. So we're likely to see movement in the Bund, Euro stocks, and the German DAX. Coming into that, there's a lot of uncertainty as to what the ECB will do to end the pandemic treasury buying program and move into the standard treasury buying program. That remains in question. So that's where we are. As far as the S&P, again, I'm quoting December here. 161,000 contracts have traded. in the S&P this morning. Quite low volume compared to the prior days. We're likely to see that drying up. This is quite normal in the rollover period and into expiration. Most traders kind of take their hands off the mouse and take a step back during this period. So we're seeing that come off. Yesterday, we did have the balance that I talked about. I said that it's likely to be very choppy on the open. I'm not likely to do anything for the first 15, 20 minutes, and it's likely to be a difficult trade, and I feel like that's what we basically got. Today, same thing. We are opening in range, in value. Yesterday was pretty much a balanced day, and we are on top of this massive volume zone in the ES. We'll cover that here in a minute. The overnight inventory is 76% short. In other words, 76 of the volume transacted went off below the settlement price. The range is pretty decent, 28.5, much lower than what we've had recently. And the point of control, the overnight point of control at 46.85, which is a battle zone yesterday. There was a huge battle zone yesterday of 46.85, and here we are again. In fact, the point of control yesterday for yesterday's action was 46.90, and that's the result of a heavy ICE program selling into 90. If you have a heat map, you will have probably seen that very clearly. And then once it broke through, it pulled back and it traded on the buy side pretty good at 46.90. So we have this very prominent ledge there at 46.90, but really the main action is at 46.85, and that's what we're coming into today's session with. Crude oil pulling off a little bit. Crude has pushed up above 73 and has pulled back to 71.65 currently. Crude is likely to stick around this range. Remember, we expected crude down at 63.64, which it took care of. And we're expecting it to test 74, 75 to 75 even in that range. And it's in the process of doing that still, in my opinion. It's likely to be grinding its way up there. Let's take a look at what was expected yesterday. I'm not going to go over what I posted because it was pretty much the market didn't have any range, so there wasn't really much action. The primary scenario yesterday was an open auction that pushed higher and then came back in. And the secondary scenario was to push the overnight high, come back and test as far down as 56 and then bounce back up. Neither one of those actually happened. The range yesterday was a lot tighter than expected. And as you can see in front of you here, these levels are for today, not yesterday. And as you can see here, there was a lot of choppiness yesterday. So here's this gigantic high volume zone all the way down to 56. Surprise, surprise. You just heard that number before. This area here is a massive area of acceptance from all the way up at 46.97 to 46.90 to 46.85. Down into 46.73 half, which is the MC point of control. And this is now acting as the CVPOC at 46.88. So the market, what this is saying, the volume profile is screaming out here, is that the market loves these prices. We have actually similar action in the NQ. Look at the NQ here. The NQ, this is the profile for the NQ, and look at that. The NQ has a CVPOC, a composite volume point of control, right at these prices, and it is likely to continue to be choppy as well in the NQ. So this is a kind of a precarious area to trade. NQ at around 16,300, and here in the S&P anywhere between 46.95 down to about 46.70 is a precarious trade. So What happens? We have responsive selling immediately on the open, so I'm expecting it to push down to here. And then we get an immediate pop back to the open. So here we are battling 90. So there's a tag of 90. Then we put in a lower low. So it looks like it's done. So we're looking at trading from the inside out, looking for a pullback and a continuation. Nope, no such luck. Instead, it goes back to 90. Then it taps 90 and it taps 90 with a ton of volume. See that delta pop there? And it breaks out with some pretty big volume, goes up to 96.50, consolidates and comes right back, and then it tests the 90 from below, and it was just very, very choppy, easy to lose money. Easy to lose money in this range. In case you're wondering what this chart is, it is actually a point and figure chart, a 1 tick by 8. I'm stepping back into the point and figure charts now to be able to read zippers and breakouts more easily. There's nothing better out there than a point and figure chart to display that. And so we move into these choppy consolidation kind of ranges. We break down. You could see a nice pullback. This was relatively decently legible there. The pullback to 86.50 for a push down. And then we have this very clear consolidation, and we just slosh through these consolidations. To me, this is just a great market to donate money. I'd rather give my money to St. Jude than to traders chopping each other's hands off as we try to trade the noise. So yesterday didn't do very much with this action. We ended up channeling up, and yesterday we ended up with what was a neutral day type, chop coming into the fact that we are in this high volume zone, composite high volume zone, and coming into roll with options expiration tomorrow means that today we still have to exercise caution, and tomorrow is likely to be a pretty rough trading day, pretty choppy, crappy trading day. So tomorrow is a good day to just step back and work on something. Work on your journal, taxes, whatever. Keep the market in front of you because we never know what surprises there are. But as an old pit trader used to tell me, the market comes every day bearing or taking gifts. So you need to stick around even when you're not expecting anything. But so I'm always here, unless, of course, the baby comes tonight or tomorrow. But I'm always going to be here watching what's going on. But I'm going to tell you that I'm not going to commit to anything but A+ setups, and I'm not going to give the market much room for these whipsaws. So that's where we are. Yesterday, a lot of delta buying, but just remember that as the roll happens from today till next Wednesday, basically, you do not want to pay attention to any type of order flow information. So delta, trade dots, heat maps, the volume in general, they're going to be deceptive because they're going to contain roll volume within them. So just be careful. This is just a good time to just relax and take your hands off, unless there are big moves, lots of impulses, or anything, something outstanding. It really isn't worth committing too much to at the present time. So what have we done since? We have done nothing since. This is a 1 tick by 20 PNF. Let me switch back to 30-minute because it really looks more familiar to folks. Here's the 30-minute. We've really done nothing. We've pushed that high. We closed in what was technically a neutral extreme high yesterday. Quite bullish close, relatively bullish close, but the overall profile yesterday was pretty Gaussian or pretty balanced. And so overall, there's not much to do with this. There's not much to anticipate in terms of this rally into the overnight session. We pushed the 03 quarter high to 06. And then since then, we have just kind of just traded sideways. We have a weak low. We have a double bottom at the low officially right now at 46.77. 50. We have a double bottom that is in play here. So it looks relatively weak to me. We're tangled up with the point of control at 46.85. We're below mid, below VWAP. We do have a negative inventory, but it's not that negative, and the volume's quite light, so that inventory is not really significant. And so I'm expecting this to try to push higher, but I'm looking for these lows to take, and I'm looking for this low to be taken out. Remember, we expected higher highs, higher lows. We expected one-time framing up to continue, but I think it is at risk today in this ridiculously fat part of the profile. So just remember, we're in balance. And when we are staying within a thick area of the profile, we are accepting old balance. And it's really hard. This is the tall grass, the analogy I started using when I came out to the public in 2009, 2010. I used to say, think of a golf ball that is bouncing into the rough or tall grass. It tends to get caught in there. That's what happens with prices in high volume nodes versus low volume nodes, where it's like a golf ball that is hitting a concrete pavement or is hitting a very short grass or the fairway. It is likely to bounce more. It's likely to bounce more, and it's likely to move around more. And that's actually below the 46.56 area. As long as we are in this zone up here, from the 46.56 to about the 47.15, I believe the price above, as long as we're in this zone, it's likely to be choppy, especially coming into rollover. So I'll leave you with that. I don't have any comments about today's action. It is likely to be fairly choppy. I'm expecting an open auction in range, and I do invite you to please donate to myed.ge/St. Jude to support the Edge Clear 2021 fundraiser for St. Jude to support kids with cancer. Please take a moment to donate anything, $3, $1, $5, $50, and many of you have donated. And of course, Edge Clear is pledging all of December's commissions on new or newly funded accounts to be 100% donated for the month of December, less fees, clearing, NFA fees, exchange fees, all that stuff. Basically, whatever income, whatever profit Edge Clear would take from new or newly funded accounts for the month of December would be 100% donated to St. Jude. We stand by our pledge and vision to support our community, and supporting kids with cancer is at the top of that list. Good luck, and I'll catch you tomorrow morning. Take care.